Welcome to CEF Insights, your source for closed-end fund information and education, brought to you by the Closed-End Fund Association. Today we are joined by Hansjoerg Pack, Director and Senior Portfolio Manager of Equities with DWS, and Lead Portfolio Manager for the New Germany Fund, ticker symbol GF. Hansjoerg, thank you for being with us today.
Thank you for having me.
Hansjoerg, I mentioned the New Germany Fund, a U.S.-listed closed-end fund you manage. Can you discuss the investment strategy as well as the objectives of the fund?
Sure, Diane. The fund seeks long-term capital appreciation primarily through investments in middle market German equities, which means that a large proportion, at least 80% of net assets, ought to be invested in equity or equity-linked securities of German companies. And the focus is clearly on small and mid-sized companies.
Hansjoerg, over the past year, global markets have seen significant shifts in trade policy, supply chains, and energy policy, and Europe has dealt with the challenge of the war in Ukraine with Russia for over 4 years. However, German and European markets have been outperforming the U.S. in recent months. Where do you see the German equity market currently?
Currently, we favor almost all other markets over the US market. The main catalysts, I guess, were the election of Donald Trump in late 2024 and the announcement of the newly elected German government in early 25 to increase fiscal spending. The new US administration sent several messages across the Atlantic, which could not be mistaken. Germany announced a massive increase in fiscal spending, mainly on public infrastructure and defense, and laid out plans to reduce red tape in the administrative processes, for instance, adjusting required sustainability reporting for corporations. That were the main triggers.
Are you finding valuations to be attractive, and how do they compare to the U.S. equity market?
On valuations, let's not be misunderstood. We're not at the beginning of a major bull market, and equity valuations globally have gone a long way already, but not to extreme levels. What is interesting is that thanks to the perceived or real US exceptionalism and the run we have seen over the past years in the Max 7 equities, the valuation premium that the US market always had over European markets has widened to an extreme level. At one point, it was greater than 50%.
What is your outlook for German equities as we move forward in 2026?
For 2026, we're quite constructive on German equities, supported by the fiscal impulse, political stability, and an improving growth momentum. In our house view, we see Germany as the main beneficiary of Europe's fiscal turn. We are expecting low double-digit earnings growth for the German market in 2026. And currently, we would prefer smaller and medium-sized companies in Europe and in Germany.
Hansjoerg, how do you see an allocation to an actively managed German equity strategy like New Germany Fund best positioned for a broadly diversified portfolio of a U.S. investor?
Look, the German economy roughly accounts for 4.5% of global GDP, according to the IMF or the World Bank data. On a PPP basis, it's probably a bit lower, say 4%. In terms of market cap, the German market only accounts for roughly 3% of global market cap.
Hansjoerg, thank you so much for taking the time to join us today.
My pleasure, Diane. Thank you.
We want to thank you for tuning in to another CEF Insights podcast. For more educational content, please visit our website at www.cefa.com. This material is not and is not intended as investment advice, an indication of trading intent or holdings, or the prediction of investment performance. All fund-specific information is the latest publicly available information. All other information is current as of the date of this presentation. All opinions and forward-looking statements are subject to change at any time. DWS disclaims any responsibility to update such views and/or information. This information is deemed to be from reliable sources. However, DWS does not warrant its completeness or accuracy. This presentation is not intended to and does not constitute an offer or solicitation to sell or a solicitation of an offer to buy any security, product, investment advice, or service, Nor shall any security, product, investment advice, or service be offered or sold in any jurisdiction in which DWS is not licensed to conduct business, and/or an offer, solicitation, purchase, or sale would be unavailable or unlawful.